talk of the day, very much from the big end of town, but it is the news. BHP abandoning a $75 billion takeover bid for Anglo American. It says it's not been able to secure the backing of Anglo's board, which means under UK rules, the BHP cannot return to make another bid for at least 6 months, unless there is another offer put on the table for the London-listed miner. BHP's aim was to secure Anglo's copper assets in Latin America. In a statement, the company said, while we believed that our proposal was a compelling opportunity to grow the pie of value for both sets of shareholders, we were unable to reach an agreement in our specific views in respect to the South African regulatory risk and costs. So Anglo says that it's fully focused on delivering plans to increase value to shareholders, including divesting less profitable assets and focusing on expanding copper output. BHP's share price down by 1.8%. Although, just to Francesco's point, it is actually a negative session on the market. And, to compare it with what's Rio Tinto, for example, share price is down by 1.4%. So I wonder what my guests think of BHP now. Francesco, can we read into the share price today that it's not as if all shareholders are really upset that they've had to walk away, because there was a lot coming in that deal regardless that was going to be complicated in this scene.
A lot of moving parts. And with those restrictions in the UK market, makes it difficult for companies to get under the bonnet, if so to speak, and have a look at the business. Normally when a company backs away from an acquisition, you'd expect their share price to rise, but as you mentioned, our market's lower, so that's got one factor in there. I think the market was looking at BHP optimistically on this acquisition because of the amount of copper that was in the deal, and copper, which I've mentioned on this program a number of times, that we think is the commodity that will benefit over the next sort of 2 to 3 years, because of the requirements for upgrading electricity grids around the world. I think that was BHP's main focus. I get it from Anglo. Their shareholders were going to be disadvantaged, if you like, by being forced to spin out a couple of businesses that were in tough regulatory environments, if you like. So that put more added unnecessary risk on their investors. So they all backed away from the deal. Look, will they come back to the table? I don't know. BHP's probably been looking at this for quite some time. They could have made a play at it around December when Anglo's share price was very low, but they thought that they'd do a fair and a fair deal for Anglo shareholders. But look, it's business as usual for BHP. I like BHP. I think it's trading on a reasonably attractive PE. Howard mentioned earlier, there's a lot of stocks on high PEs. I think BHP's relatively attractive for the long term. There is copper within BHP, so it's not as if they're going to miss out on that. It's just somewhat diluted by a lot of the other commodities they mine as well. So we have an accumulator on BHP, and I'd probably agree to that. And days like today, where it's being sold off, is probably making it a little bit more attractive for investors.
There you go. Now, I guess, Howard, one thing that some BHP shareholders will be relieved is that BHP wasn't willing to pay whatever, for Anglo American, that there was, even though the deal was, or the offer was lifted a couple of times, they clearly weren't willing to pay, completely overs. I know that mining is not your favorite thing, but BHP is a stalwart of the Aussie market and clearly has a bright future. Would you be buying it? Where do you see the future of BHP?
Well, I once upon a time did own BHP, probably 17 or 18 years ago. And if I remember correctly, I paid about $40 a share. And considering it's not much more than that now, yes, they divested South 32, so it's a bit more than it looks like. It certainly hasn't been a wealth winner, but neither will it ever be a capital killer. I mean, it is a really, really large and well-run, as much as one can run a company that size well-run company. And, most people in Australia probably have it in their portfolio and their super fund, if not in their personal names. I don't own it. TeamInvest members don't own it. We've never really liked it from a TeamInvest perspective because you can't really be certain that earnings per share are going to be materially high in 5 years' time because they're dependent too much on commodity prices. But I think BHP shareholders should be very relieved that, as you mentioned, that they didn't keep on bidding it up. And what's more, there's no reason why they can't come back in 6 months' time with an offer just for the copper assets or the coking coal assets, the metallurgical coal in Queensland. Why do you have to buy the entire thing to get the bits you want? One of our members made the comment to me over the phone a couple of weeks ago when this offer first came out. It's a bit like going down to a car dealership, seeing a terrific Porsche on the showroom floor, second-hand dealership, but almost brand new Porsche, and buying the dealership in order to get the Porsche.
All right, so that is not a buy. If you were a BHP shareholder, would you keep holding, Howard?
Well, probably. I mean, as Francesco says, it's not on a particularly high PE at the moment. I don't think it's going to do you any harm by holding it. But the opportunity cost is, over the last couple of decades, you could have done much better in other companies where you could be virtually certain earnings per share would be materially higher. But no, I think if you're holding it, carry on holding it. It's not particularly pricey at the moment.
Got it. Thank you.